Very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma. The markets are soft, being Friday. We've been actually going down for almost last 4 days. This is the fourth day in a row that we are trading lower, lackluster, whatever you may call it. We are at a week's low. Had a furious rally, so some amount of profit taking is not ruled out. And it's the stocks which have not really moved a whole lot are doing well today. UPL coming back from the ashes. Select PSUs like Petronet, Concor, GAIL, NTPC. In fact, top 5 gainers on the index actually is the PSU basket. But overall, it's okay, slightly on the sideways being a Friday. Today we've got a very special interaction for you, not exactly on markets that we get for you every day. We get you best of the market voices, analyzing the investing landscape. Today we've got the same thing but from a differentiated angle. What is also happening in the market last couple of quarters and in fact last 2 to 3 years, we're seeing the rise of passive investing. Millennials are wanting to buy a basket of companies and ETFs and the index funds, which several of the mutual funds are launching. Index funds are also indices on which these index funds are benchmarked are also being launched by National Stock Exchange, the country's premier exchange. So today we thought of getting you what all is available if you want to go deeper into the subject of passive investing. What's the thinking behind manufacturers and designers of such product? We have with us today NSE Indices business CEO Mr. Mukesh Agarwal joining us for more on that. Mukesh, good afternoon. Thank you so much for joining us on this chat. We've been seeing a lot of innovation happening at NSE itself, new indices being launched. Before we get into that, I wanted to understand the research and the thought behind it, and what is your observation on where is this demand coming from and the way investing landscape in the passive side also is evolving?
Ajay, thanks for this opportunity. I think you have caught up on a very interesting topic. So if you look at India, as you mentioned, passive investing as a concept has been picking up. So within passive investing, you have both index funds as well as ETFs. And if you look at ETFs over the last 12 years, they have grown at an annualized rate of approximately 43%. And even if you look at last 1 year, the ETF assets under management have grown by almost 46%. And today, AUM of equity ETFs account for almost 20% of equity AUM of the total mutual fund industry in the country. So increasingly in line with the global trends, ETFs and index funds are playing a very important role. And why? The simple thing is because it is a very convenient way of investing in a diversified basket of stocks at a very low cost or cheap price. Basically, this is a very easy and convenient way for an investor to get an exposure to a basket of stocks. Take an example like if an ETF tracking Nifty 50, by buying 1 unit of Nifty 50 ETF for a price as low as 160, 170 rupees, an investor can get an exposure to a basket of 50 stocks. So that is the convenience. And so growth is happening. And in line with the industry trends and global trends, we are seeing that increasingly people are looking to launch more differentiated ETFs or index funds, which are based on different kinds of indices. And so our objective as an index company is to make sure that the indices what we launch are relevant and replicable. So we are in constant dialogue with the market participants, and based on their requirement, we create indices. So I'm very happy to say that this year, like whatever number of indices we have launched, and I will mention a few. And so whatever indices we have launched, there have been some products, some of the other product which has been launched on those indices. And another thing which I would like to highlight is debt ETFs as a concept is also picking up. It started with the main corporate bond ETF started with Bharat Bond ETF, which was launched in December 2019. And now today they account for approximately 17-18% of the total AUM of the ETFs in the country. So that is the kind of growth and demand we are seeing in the markets. Ajay?
Right. No, Mukesh, I completely agree. I mean, I'm personally following this space for some time now, and I'm personally very fond of this entire concept because unfortunately we have seen several of the mutual funds schemes having very high turnover in the fund. Costs of course are high, expenses, so it actually eats into the long-term the saving and the return pot of the investors also gets impacted in some manner, whereas ETF offers a very good alternative. And whatever activity or research or action goes into an ETF is actually at the design and formulation stage. So probably people are understanding this very well. Let's go further in it. See, it all started several years back purely from the frontline benchmark indices, ETF and index funds coming in. But now we are seeing that a lot of several concept ETFs, index funds are also coming in, and those are actually kind of tracking the indices which companies such as yours are actually coming out with. So give us some examples of some popular ones which you had a two-way dialogue with the market participants and where there was demand, and then you designed a product. Give us some examples of that.
Yeah, few examples which are already available. One is Alpha Low Volatility Index, which we have. There is a product available on that in the market. Now, recently, sometime back, we have launched an index. This is a very interesting concept, I would say. Nifty 200 Momentum 30 Index, and on which UTI has recently launched and opened the IPO for this particular index fund on this index. So if you look at this Nifty 200 Momentum 30, what it does, how we create this index, it's a very interesting concept. So what we do, we look at the Nifty 200 stocks, that is the 200 stocks comprising of Nifty 200. Within that, we look at the stocks, their returns, daily average returns over last 6 months and 12 months, adjusted for daily volatility. And so based on that, we select the top 30 stocks which have got the highest momentum, and we create the index. And those 30 stocks need to have FNO. So based on that, we have created this index, Nifty 200 Momentum 30. This is like a concept like what we have, and the coach and the captain, they want to select a cricket team. What they do, they believe that when they have to select batsmen, they believe that the recent performance will continue. And then they select the team comprising of batsmen which are in form. So I think same thing over here, it continues. Like globally, there have been studies which have been done, and which shows that if one buys the stocks which have outperformed recently and one sells the stocks which have underperformed recently, one can generate significant returns in the short term. I think based on that theory, this index has been created. And even whatever analysis we have done based on the past performance reflects that. So yes, I would say that past performance is not an indicator of future performance, but past performance, whatever analysis we have done, it's very, very interesting. And it does show that this theory does hold out. And this is a concept which is very popular globally also. The largest fund which has the momentum ETF, the size of that ETF is something like 15 billion US dollars. If you convert it into rupees, it is like 1 lakh crore. One ETF on momentum index globally has got assets of 1 lakh crores, which is a huge sum.
My goodness,
Ajay,
I can understand the popularity clearly. Mukesh, I'm also keen to understand how are weightages to various sectors, analyzed to be put whenever you're designing an index.
So basically, we don't have any preconceived notions that such and such sector will have so much of weightages. As I mentioned earlier, we select stocks based purely on the momentum. Momentum is the price return over 6 months and 12 months. And we see a huge difference between the sector composition of the momentum index vis-a-vis the base index, which is the Nifty 200. So if you look at the momentum index, as all of us know, recently we have had rallies in consumer durables, pharma, IT, and metals. So this index also, the weightage for this 4 sectors is much higher than the base index. If you look at the pharma, in pharma, the overweightage is approximately 14.5%. In consumer and IT, the overweightage means the weight of these sectors in momentum index vis-a-vis the 200. It is got higher weightage by approximately 6%. And if you look at metals is higher by around 10%. Similarly, on the other side, financial services, which has got around 34% weight in Nifty 200, it has got about 8% or 9% weight in this index. So there is a difference in the sector composition also, but we as an index providers, we don't decide. It is totally determined by the momentum of the stocks, and basically the sectors which are in demand, which are getting better returns, they tend to have higher weightage in this index.
Right. One last word, Mukesh, then. What else are you working on? What are you planning? How do you aim to steer the business ahead? What's on your mind in terms of new products?
Yeah. So I think before I go forward, I just wanted to mention some kind of returns over how this index outperformed the Nifty 200 base index. So if you look at last 10 years, annualized returns of this index have been around 18%. Same thing over last 5 years, annual returns per year has been around 18%. Vis-a-vis the base index and Nifty 50 would have given you 13-14%. So clearly, there is an outperformance of 4 to 5% in this index vis-a-vis the base index. That is one. And even if you look at annual returns, if you look at the last 16 years, what we have done in each calendar year, we have compared the returns of this index vis-a-vis the base index, which is the Nifty 200. And so momentum index has outperformed the Nifty 200 index in 13 out of the 16 years for our analysis period. Now, what indices we are working on? I think we are working on a host of indices. Of late, we are seeing a huge demand for debt indices. So with seeing the success of Bharat Bond ETF and subsequently a couple of more ETFs, one ETF was launched by Nippon on AAA PSU and SDL. Seeing the success, market is asking for indices to launch debt ETFs or debt index funds. So we are working on those kind of stuff a lot. We are working on that. Then we also launched this year ESG Sector Leader Index. So we are also trying to work on a different variant of alpha and low volatility. So we have a host of pipelines. So every year we look at launching something like 15 to 16 new indices we launch.
Right. All right, Mukesh, we'll let you go on that one. Thanks so much for joining us, and my best wishes for your business going forward. Well, that was a discussion on passive and the new indices and why you should be taking a look, if not already, as far as part of slice of your portfolio. Let's take a short break on that note. More news and analysis on the other side. Don't go anywhere.